Okay guys, so it is January 30th, 2025, and we just had our first Federal Reserve meeting since the Trump administration took over. And wow, it was a huge nothing burger. What do I mean by nothing burger? Well, basically everything that the economy expected to happen happened. The Federal Reserve Chair said that they are going to leave interest rates unchanged. And the one that's a little bit scarier for the mortgage industry is that they said they're going to reduce their securities holdings. Well, what does it mean when they reduce their securities holdings? Let me walk you through this. This actually has a greater impact on mortgage interest rates than changing the Federal Reserve rate does. The Federal Reserve holds different securities. One of them is mortgage-backed securities. When they say they are going to reduce their holdings, that means that they are no longer purchasing any mortgage-backed securities. In fact, they're limiting how many they want to hold that they already have, which means they're going to flood the market with even more of these securities, which then have to be bought up by the private sector. Who is the private sector? The private sector are large banks like Wells Fargo, Bank of America, Chase, Citi. They're all the large banks, as well as huge mutual funds, pension funds, and things like that. And how do you entice these large institutions to purchase these mortgage-backed securities? It's pretty simple. You raise interest rates, which raises how much profit they get on these different mortgage-backed securities, which means, at least for the near future, rates for mortgages are going to remain unchanged, or they're going to potentially go up even further. And so that's not great news for the housing industry, unfortunately. But there is a silver lining. We are working with clients every day on this, and I want to go through the little history of what's going on in the market so you can share it with your buyers and your sellers and get them the best deals, because it is a buyer's market right now. So let's talk about it real quick. Over here, you'll see on the board, in 2019, the median household income on a house in our area was about $170,000. The average interest rate was about 4%. And that yielded the person buying the house a principal interest payment of about $790 a month. That was super healthy, that was super affordable, and at that time we had about 2 to 3 months inventory on the market. That's very comfortable, it's a very healthy market, okay? Now, fast forward to 2024, we're over here right now, right? So in 2024, we basically peaked out, okay? We peaked out in the market. The median household price went up to about $280,000. At the end of the year, the rates were north of 7%. The principal and interest for that person was going to be about $1,900 a month. And that is not a healthy market for us. We don't have the incomes in this area to sustain those kind of payments long term. So we're slowly falling over the cliff at the moment. All right, the inventory had grown at beginning of 2024 from about 1 to 2 months of inventory to, at the end of 2024, we're up to about 6 months of inventory. So now we're in 2025 and we're starting to see the prices fall, okay? The prices are starting to fall, but also for buyers, if I'm a buyer, wouldn't I want to buy in a buyer's market? So what's happening right now is buyers are able to negotiate with sellers. Now, not every seller is going to negotiate, but the more houses that come on the market, the more opportunity there is, if you're not super picky about where the house is or what the house is, that you can get a good deal on a house, because there are sellers out there that are desperate who need to sell those homes and want to move on with their life, so they're willing to wheel and deal. So what we're seeing right now is that buyers are able to negotiate in many times 3 to 6, in some cases 10% seller contributions, getting the prices down, getting the interest rates down, and making it affordable again for the home buyers. This had to happen. It was inevitable. So that's what's going on right now. Buyers should recognize that this is a buyer's market and that they can negotiate with sellers. Do not just give up on a house because you think it's overpriced. Make an offer, try to negotiate. If that seller won't negotiate with you, find another house. Maybe the next seller will negotiate with you. So there's opportunities for buyers right now that they may not have. Let's say rates all of a sudden magically drop to 5%. Then all of a sudden it's going to flood the market. It's going to become a seller's market again. You want to buy in a buyer's market. You don't want to buy in a seller's market. Who has control in a buyer's market? The buyer has control. Who has control in the seller's market? The seller has control. So if you're a home buyer right now and you're wanting to buy a house, this is the time you should be doing it, because you can negotiate heavily and get better deals than you could ever expect. and it's going to continue this way until something big changes. And I expect that to happen through most, if not all, of 2025. So that's my update on January 30th. If you have any questions, give my office a call. We're here to help you make the best negotiations possible. Talk to you soon. Bye.